Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a wonderful weekend. It is actually Monday, January 20th. Normally, I record the weekend newsletter on Sunday, but because the U.S. markets are closed today for MLK, and of course, it's Trump Inauguration Day, so U.S. markets are closed, so I'm recording the newsletter this weekend. Anyway, as you can see, this newsletter is divided into six major sections. If you happen to be new to Breakpoint Trades, these weekend reviews can be quite comprehensive. I think there's over 100 charts here, so likely this newsletter will take anywhere from 40 minutes to 50 minutes or so. Again, this isn't set up as a TikTok, type of analysis for all the short attention spans out there. This is made for people who really want to dive into the weeds, get into the charts, technical analysis, want to learn, etc. Again, my name is Matthew Frailey. I founded Breakpoint Trades 21 years ago in 2003 to provide the best technical analysis on the planet, amazing trade ideas. We have 5 detailed newsletters per week. We have these amazing mechanical trading systems from our mean reversion systems with about 80-90% winning trades. We have our KISS trend systems. Just Breakpoint Trades is like a smorgasbord for traders and investors. There's something for everyone here. Best subscription is to, well, at the very least, sign up for our free newsletter so you can start receiving some free newsletters and emails. If you subscribe, click enroll. Our best subscription is our 6-month subscription because of the cost savings. Again, this newsletter is divided into 6 sections. First off, our opening statement here. Then we're going to talk about one of our trading systems, the mechanical trading systems, the mean reversion. We still have this open mean reversion long system on the SPY, the QEBTS. So I'll briefly go over that. Then we'll move on to the general market analysis. So we're going to talk first off about, before we get into the major indexes, we're going to look at a bunch of large cap tech stocks with earnings that are coming up. As you know, we're in earnings season. We just had a bunch of banks and financials report, and most of those did very well. So we'll see how the market reacts to some of these big cap tech stocks like Meta, Microsoft, Netflix. Netflix is on the 21st. It doesn't have the weighting that it used to, but it is on the 21st. To me, the chart has some work to do, but otherwise, Meta, Microsoft, Tesla, they're on January 29th. Google's on February 4th. Apple's January 30th. Now, Costco, Nvidia, and Broadcom, there's no earnings on the horizon. They kind of report on their own timing. We'll look at a few market indicators. We'll look at most of the market sectors. We'll review the US dollar, Bitcoin. By the way, market futures were up nicely overnight, and Bitcoin briefly made a new high today. And I'm going to give you a few actionable trade ideas, as I'm also going to give you a few trade ideas on some of the mining stocks. Like I said, as far as the market, long-term, intermediate trends are obviously uptrending. Short-term, the market had a strong week last week. S&P gained about 2.9%, NASDAQ about 2.7%, the Dow 3.7%, small caps IWM 4%. So nice strong week. The bullish view is the S&P and Qs have a weekly bull flag patterns, right? Also, the S&P had a bullish symmetry break, so we're now placing higher odds at a higher low on the next pullback. All right. I can also count 5 waves up, so I am looking for a pullback here sometime soon, either some sort of ABC 3 wave. Say the bulls want to see a higher low ABC 3 wave. Now note, there is a few open gaps below, which I'll show in a minute. Okay. Commodities, they had a strong week, especially natural gas, which continues to be very strong after breaking the 200-day moving average. DBC is trying to break out of a recent range, and crude oil has been very strong as of late, but it's a bit overbought. Precious metals, gold, it's been in a nice correction since October, kind of a coiling action on gold. It's possible the 4th wave correction is over, but it's still uncertain to me. I could still see this being a little more complex correction. Either way, long term, I'm looking for new all-time highs on gold. So, if you're a long-term guy, it doesn't matter. Crypto, that's following the market. It did briefly make a new high over the weekend, so that's a positive. The bond market, we finally started seeing a pullback in the 10-year Treasury yield, though it is in a small demand zone. And like I said, I've given my macro predictions the last couple weeks ago. I said I think commodities could outperform this year. I thought energy market was of interest, and that's had a really good last few weeks. Precious metals, I think they're going to make new all-time highs this year. I still think a recession is ultimately inevitable because of the yield curve. I think we're going to see more volatility in 2025, even if the market, S&P and Nasdaq, you know, has a positive year. I think it's going to be more volatile this year. Like I said, well, also platinum, it's severely underrated to gold, so I am watching that longer term. AZ Custom 8, one of our, speculative investments, it's had a huge run over the fall time frame when we last did our webinar on it, but I think it could have a really great 2025 still. Okay, let's go and get into things. So before we get into some admin stuff, so here's a 30-minute chart of the S&P. Again, we'll get to this below, but this is what I talked about. So you can see the nice rally we've had off the lows. Actually, this rally off the January 13th low is the largest rally since the downtrend correction began in early December. Okay, so that puts odds at a higher low pullback. That said, I can count 5 waves up of some sort. 1, 2, 3, 4, 5. Now, is this a wave 5 of, could be a wave 3 of 5, which means you'd have a wave 4 pullback, or it could be a 5 of 5. Either way, you're looking for some sort of ABC pullback. Notice there's a couple open gaps here. Now, filling this open gap below, that would be a pretty deep retracement. I mean, it would be allowed if you have a completed 5 waves here. But if it's a wave 3 of 5, then I wouldn't look at the pullback here being too deep. Maybe fill that gap. We'll see. Futures are up here overnight. They have pulled back, though, off the highs. But also, you can see the MACD divergence. Again, I'll discuss this chart later on. Again, just wanted to show this early on. Next, moving on to the admin comments. So image number 3. So here, this image shows an image of the SPY ETF, a daily chart. This is one of our mean reversion systems. So, in January, this system triggered basically mid-January, caught a really nice trade. It exited perfectly at that lower high bounce. We also had a bunch of other mean reversion systems that caught the same trade. I'm not showing those. But then this QEBTS system went long again after that last low on the market, as you can see. And it's a nice trade here. The system is still long. It's nicely profitable. It entered here on, I think, January 12th. Okay. And then, or January 10th. And then this is a Monday. You had a gap and then reversal. So the trade's up nicely. I actually exited half of this outside the system just to lock in some profits. I think we exited here on that last previous day near the highs. So the trade is nicely profitable. That said, the system otherwise is still long. It's had its mean reversion move already, which was above this short-term moving average. This is a 8-day moving average. And that said, the system, a momentum hold condition triggered where this indicator turned green. So the system is going to hold this trade until this indicator turns red. But again, we exited half the trade already. Mean reversion systems had a great year last year with about 30 or so trades. Most of them were winners. And if this is a more volatile year, we could see more mean reversion system trades this year. But again, guys, just these mean reversion systems, if that's all you did on the website, you would do extremely well. I mean, you could ignore everything else in the website, our newsletters, our trade ideas, our KISS systems. And if all you did is the mean reversion systems, you would more than pay for the membership dozens of times over. Next, image number 4. Here's the trade statistic to that QEBTS system. So again, I've already covered this many times, but great stats. Profit factor of 20, 90.90% winning trades, 154 total trades. It's actually 155 with this current open trade. I'll update this the next time the system closes out. System holds an average of 11 to 12 days. That's the average. And like I said, here's image number 5. So here's the mean reversion system trades from 2024 that triggered on SPY. A few more triggered on the ES futures. I'm not showing that here, but you can see out of 29 trades last year, almost every single one of them were winners. In fact, the loser here was an error, one that I sent out that didn't actually trigger, and we had to take off the trade right away. Lost $50. But I mean, if you just did this modest size, these trades are done either with $10,000 or $20,000 of SPY. That's very little capital. and that's not a leveraged ETF, and over $10,000. The futures made around almost 30,000. Next. All right, back to the general market newsletter. So item number 6 shows the index sector table, what transpired on Friday, and of course for the week. Again, nice gains for the week. You can see these gains. The small caps outperformed. Ultimately, they're still underperforming on their dailies, but they outperformed last week up about 4%. S&P was up 2.9%, NASDAQ 2.5% roughly. The Dow up 3.7%. Fairly broad-based rallies you can see out of the 21 market sectors. Retail and drugs were down. Otherwise, big gains here for most of the sectors. Banks, financials had a big week. Brokers. Remember that a lot of the financials started reporting earnings, and so those had big numbers. Remember, we're in earnings season now, guys. We've already seen the banks, and we're going to start seeing some of these large cap tech stocks in the next week or two. Okay. Energy also had a big week. XLE up 6.3%. Oil services up 7.4%. Home builders up 8.5%. With the pullback in rates, that area bounced as well. Not surprising. Currency-wise, U.S. dollar down just a tad for the week. Bitcoin did make a brief new all-time high. This percentage gain is from the weekend, so it was up more here. It's up more here overnight and into Monday. Made a new all-time high briefly. And as far as commodities, most of the commodities were up, save for sugar, which we're not going to look at, but general index up 1.4%, crude oil up another 2.3%, uranium up 3%, corn, coffee, you name it. Precious metals, gold up 0.4%. Silver was flat, had a big pullback on Friday, pulled back right from that resistance area. GDX, the gold miners, up 2.2%. And as far as the bond market, really nice pullback in the yields, 10-year, 30-year. That's helping the market as well. Finally, item number 7 shows the economic news calendar. Like I said, today market's closed for MLK. Not a lot of news on the docket here this week. We have initial jobless claims here on Thursday, natural gas inventories, global PMI, U.S. services PMI. So we'll see how that looks. But not a lot of economic news here. The big thing here, guys, is earnings. We're in earnings season, and generally the market holds up during the earnings season. So we'll see if that's yet the case. Okay, so let's look at some of the recent stocks that have earnings and some of the big cap tech stocks before we get into the indexes. So here's Goldman Sachs. I actually put this out as a long idea last week. Remember, this had earnings, as did a lot of financials and banks. So really nice trade here, and even a nice trade over that resistance high. Still looks very strong with that volume. Number 9, here's BK, another one. Breakaway gap there on some earnings, and briefly taking out that recent high. So again, financials, banks had a good week. Those stocks have done very well, especially if you played some of those earnings. That said, some of the big cap tech stocks that are coming up, here's Netflix. Now, Netflix doesn't have the weighting it used to. I haven't checked recently, but it doesn't have the weighting like the other big cap tech stocks now. This had a little slanted head and shoulder pattern back here in December, which played out. So far, we got to bounce off this demand zone, but this is struggling here. Now, earnings can trump the chart. If earnings are a blowout and this thing gaps up and takes out these resistance areas, you can see right around the declining 20-day, 50-day, that's your resistance. So you've had a huge gap up. This could negate this chart, but just technically right now, it's kind of bearish looking. Yes, you've had to bounce off a little demand zone here, but you got a resistance up here. You also have your moving average ribbon, which went bearishly stacked, and it's starting to exhibit its first squeeze pinch on the underside, which is generally a good short. So we'll see, guys, how it reacts to earnings. If it does fail in earnings and sells off, you got a much larger demand zone down here right around the 200-day moving average, which would be likely a better buy opportunity. But we'll see how it reacts to earnings. The other stocks, they're not reporting here for about a week and a half. Here's Meta. It held this recent support. It has an obvious coil pattern if you wanted to play that. But earnings are January 29th, and all these are after the close. There's a lot of stocks, like a lot of the financials, had earnings before the market opened, but all these are after the close. Chart number 12 here is Microsoft. So this one's been weaker than a lot of the other big cap tech stocks. It also reports on the 29th. So far, it's bounced off this demand zone, but it's more of a sideways range. Chart 13, here's Tesla. This also reports on the 29th. Now, this bounced recently, but to me, this has got some work to do. You got a supply zone up here. That's a big resistance area. And you got a larger demand zone. Should it fail here, form a lower high and come back down. So we'll see, guys. Tesla's got some work to do, but you can see the supply and demand zones. Chart 14, here's Apple. Now, Apple has been very weak. Last week, Thursday, had a big sell-off that weighed on the market a bit. It's down into a little demand zone near an uptrend line. Earnings are January 30th. Apple's had problems and not selling as well in Japan or China, etc. We'll see. There is a little RSI divergence here. Below this demand zone, you have the 200-day moving average below. Here's a 2-hour view of Apple. So again, you can have a nice pullback here. Now I can count 5 ways down. 1, 2, 3, 4, 5. And you have some MACD divergence into a little demand zone. So we'll see if it can bounce into there or not. And chart 16, Google. Now Google reports on February 13th. It's been quite strong here. Broke out of that coil in December, and it's coiling again. Chart 17, here's Amazon. Now this reports on its own schedule, so it's not reporting anytime soon here. So far, you got a kind of a wedge into a support. So moving average ribbon is pinched. We'll see if this can break out to a new high or not. And NVIDIA. So NVIDIA also does not report recently here. So it's still holding this big support zone. Otherwise, it's chopping around here. We'll see what this does. And the other big one is Broadcom. It's in a coil pattern. I actually added that to the trade ideas. It's not reporting anytime soon either. We'll look at that later on. All right, let's move to the major indexes. So chart number 19, here's the chart with the 5 key major indexes, the weekly chart. Again, you can see big rally last week. The bullish view is you have sort of flag patterns here showing up on the S&P and Dow. Not so much on the Dow and Russell. Okay, obviously we had a nice pullback there in December from that dark cloud cover, but we'll see if these flags play out or not. And let's move on from there. Chart number 20, here's the daily view of those same indexes. Again, a week ago we were at the lower Bollinger Bands on all those indexes. So far we've had a logical rally off of that area. Okay. Moving to the individual indexes, here's the Dow Jones. This is the daily chart. Again, so far, once again, it rallied off this demand zone. It's now back to the 50-day moving average. Still struggling here. Remember that first rally off the demand zone stalled at the broken channel line where I said it would find resistance. Okay, pulled back again into the demand zone, formed an RSI divergent low. Now it's bouncing again. Again, this could still form a lower high again, be some more of a complex correction. We'll see. It's got work to do. It's got to clear this 50-day. It's got this broken trend line to contend with. You have the moving average ribbon, which hasn't went back to bullishly stacked yet. Moving on to the S&P 500 charts, start with the bigger picture. Here's the monthly view going back to 1994. This is a great chart for the macro view long term. Again, we've been in this secular bull market since the March 2009 lows. You can draw a very obvious uptrend, parallel uptrend channel on the S&P. No changes here. One target over time could be the upper channel line. We've been now in this bull market for about 16 years. Secular bull markets tend to last anywhere from, 16 years to 20-something years. So just to put it into context, eventually we'll see another secular bear, but, this could still go on for a while. Another great guide long-term, guys, for you guys who are retired, you want to follow the general trends, but you want some sort of protection, but you rarely want to make a move. This 14 stochastic on a monthly chart is a great guide. The 50% area. And I've ran tests on this, and it's a profitable system, but you can see here, when it's above 50%, you want to stay invested. When it falls below 50%, that pointed out those bear markets and the tech bubble crash, the 2008 crash perfectly. And then when it stays above 50%, you want to be back long, and generally when it tests the 50% area, it tends to be pullbacks large pullbacks in the bull market. You can see it did briefly lose the 50% area in 2022 in that bear market, but then righted itself. So it's a good longer term chart. It's not my style. It's too long term for me, but the great guide. Next, image number 23. Here is a weekly view of the S&P. So first off, this demand zone we've been showing literally for the last 3 or 4 weeks. So far, you can see we've been holding that. We've been in this uptrend channel since 2023. Bear market bottom here was in October 2022, as you know. We've been uptrending since. And again, kind of has a bull flag to it, so we'll see if we can pop and make a new high here or not. A couple other things to monitor are this moving average ribbon, the trend line, lower trend line support on the RSI, etc. Okay. Next, chart number 24. Here's that other weekly chart I've been showing where we could have a possible wave 3 of 5. That said, it's possible, or it's possible this gets shifted over to here should we make a new high. Okay. Again, eventually I'm looking for that deeper wave 4 correction, but we need to see a confirmed high on this wave 3 of 5. So if we make a new high here, then these fibs will shift to that high. But again, we either have it here now, in December, or this gets shifted if we make a new high. Continue to watch the coiling actions on the RSI indicator. Next, chart number 25. Here's the S&P daily KISS system. Remember, this has been doing extremely well. Recently, it did it stopped out for a brief, small losing trade, which is logical to expect, guys. This thing caught 3 monster trades. These daily KISS systems, have anywhere from 60 to 70% winning trades. So you expect, a few losers, especially after 3 winning trades in a row. So that's just common sense. This is the high performance daily. That said, the standard version actually went back long on Monday. I'm not showing that chart here tonight, but it did go back long on Monday. Next, image number 26. Here's the weekly versions of those KISS systems. I meant to show this first actually instead of the daily, but obviously no changes here. These are all still long. These are sort of like paint dry versions of the KISS systems. They have wider stops, and they'll stay long, much longer than daily charts. Sometimes 1 or 2 years. So they're all still long, as you can see here. No changes here on these weekly KISS systems. Image number 27. Here's the 4 time frames we like to monitor with these custom indicators. So again, we're below the ATR in the daily. We briefly broke above the ATR on the half day. So that's a positive. We'll see if we can form a higher low on the next pullback. ATR is supporting all these lower time frames, as you can see. Next, moving on to the standard chart. So chart number 28. Here's the daily view of the S&P. Again, we filled that gap the previous week. Remember that? That was a target of mine. That was filled. Those gaps are always magnets, folks. And we had a demand zone, which we got a little bit into and then rallied up. Now we're into a supply zone. This is a logical area to pull back from. You can see we did briefly break this little daily downtrend line. If we pull back here, again, bulls need to form a higher low. And it's honestly best if the bulls can follow through a little bit more. The next resistance would be around this 60-50 area, which the futures are basically testing. And I apologize, guys. The wife was calling. I thought I had the phone on mute. Anyway, like I said, it'd be best if the bulls could follow through here. We are testing that area in the futures market. So we'll see how the cash does on Tuesday. Next. Chart number 29, here's another daily chart we've been showing, this expanded coil. So we did briefly, what I call these a Pinocchio move or a bull trap. You went briefly below that trend line and then recovered. That caught people short and then got trapped, bull trap. Remember, we had that open gap, which was a logical fill. So market wanted that gap. Again, guys, if you're trading the indexes really like to fill these gaps. So that was a magnet and then we reversed off. Now resistance right up here in this upper trend line. Next, number 30, here's a half-day chart. The S&P, again, we filled that gap, as you know, last week. And bounced off that demand zone. Now we're up near this supply zone, right in this range, and of course this downtrend line. Chart 31, here's the other half-day chart I've been showing, that where we were showing a possible completion of a wave 4, as long as it held that last low, which so far it has. Okay, then you get a rally and a new all-time high in a wave 5. That said, if that's the case, I don't expect it to go straight up there. I am expecting a pullback here sometime soon, some sort of 3-wave pullback. Again, there's positives here with the symmetry break, with the earnings market, etc. Chart 32, here's that 60-minute chart I've been showing. So first off, back in mid-December, late December, after price lost that big support zone, we said it would be resistance on the first test, and it definitely was. We had a 217-point rally there, sold off, made another low, another lower high rally, 192 points, made a new low. And this last rally is a symmetry break, 240 points off the lows. That's clearly larger than these other two rallies. So that sets the stage for the next pullback being a higher low. That's a bullish symmetry break. All right. So again, we'll see. Do we start pulling back here, or if futures hold up here, we could see a little gap up in cash. You also have a downtrend line here, etc. You can count 5 waves up here, but I'm not sure if this is 5 waves complete or wave 5 of 3. Notice there are a couple open gaps below. So if you start pulling back here, under the bullish case, I'd at least expect to fill this first gap. This lower gap would be quite a deep pullback, so let's not even talk about that yet. And chart 33, here's that 30-minute chart I showed early on, where you can clearly count 5 waves of some sort here. 1, 2, 3, 4, 5, but it could be a wave 5 of 3. If the case here, a pullback would be more of a wave 4, maybe fill the gap, then go up in a 5. And chart 34, here's a 15-minute view showing you essentially the same thing. Here I added some fibs, but like I said, should we make a new high on the cash come Tuesday, these fibs will need to be adjusted. Okay, guys, that does it on the S&P. Moving on to the NASDAQ. Here's the NASDAQ weekly chart, up 2.9%. Again, kind of a flag look for now. Still obviously in the uptrend channel, which started in late 2022. Another thing to watch longer term is this trend line on the 14 RSI. Breaking that eventually would be an objective exit for a pullback in the market. Chart 36, here's the daily KISS system. Just like in the S&P, it's had really nice trades here. The last trade it got in got stopped out, and it's flat. The daily standard KISS is back long. Okay. Otherwise, ATR resistance above. Next, chart 37, here's the 4 time frames. Similar look to the S&P. Below the ATR in the daily, we bounced off that support cycle. We're right at the ATR resistance here on the half day. Remember, we broke that on the S&P. Nice rally though from that support cycle, and we're above the ATR on all the lower time frames. Next, chart 38. Here's the daily view of the triple Qs. Again, so far, nice rally off the lows. Now, this isn't as much of a symmetry break at the S&P. I think it's a very slight one. All right, so it's not as strong. It is into a little supply zone here. So we'll see what it does. This could be an area to struggle a bit. And chart 39, here's the daily chart, just like in the S&P, where I was showing that we could have completed that wave 4, and then eventually we rally up into a wave 5. But we are into a supply zone. Chart 40, here is a half-day chart, just showing you how we're up around the supply zone. We have broken this daily downtrend line. Chart 41, here's a 60-minute view. Here I added some open gaps here. So on a pullback, at least one of these gaps could be a magnet. Eventually we fill this lower gap, but for now we have this gap. We do have a very, very slight symmetry break here, not as strong as the S&P. And finally, chart 42, here's IWM small caps. They were up 4% last week, outperforming the indexes, but again, they're underperforming overall in the daily. They had a really nice pullback from that December high there, or high in November. Perfect rally, though, off the 200-day moving average and 61.8 fib. Again, pro tip, guys, whenever you have two important things line up, technically, such as the 200-day moving average, which is always important, and you have something like a 61.8 fib, which is your most important fib, that's always a very low risk trade. You had a nice MACD divergence there too, and RSI divergence. So that does it on the major indexes, guys. So let me just give you a quick update on futures. ES futures are up 23, 24 points right now. So we'll see how they fare tomorrow morning. Moving on, let's look at some market indicators. Here's the VIX. So far, nothing new on the VIX. It's just chopping around within its Bollinger Bands. Here's the 60-minute view of the VIX. So we like to watch this for gaps. The VIX really, really likes to fill its gaps, even more so than the S&P cash, I think. But notice we have multiple gaps here. We have a gap to the upside if the market wanted to pull back. And we have some open gaps to the downside. So if we rally right away, say Tuesday or something, maybe we fill this first gap. There's a bigger gap below there, which would likely be hit if the market made new all-time highs. Chart 45, here's the percentage of stocks in the S&P 500 that are trading above their 20-day EMA. So guys, just wanted to toot my horn. This chart I showed back in mid-December played out. It got very oversold here on that first move, down to about 6%. And then it moved up, and I said, really good bottoms generally have a second test, like you see back here in October of 2023. And that ended up what happened. It pulled back, formed a higher low, kind of a divergence with price. And now you can see it's back up over 70%. So this ended up playing out just like I said to watch. Moving to the bond market, chart 46, here's the 10-year treasury yield. So nice pullback in the 10-year. Okay. So that helped the market as well. And if this can continue, that would help at the market as well. That said, there is a little demand zone, so it could try to bounce here a little bit. But ultimately, if this can form a lower high and then decline further, that's what the market needs. Chart 47, here's TLT 20-year bonds. Remember, they move opposite to rates. Remember, I talked about these doji candlesticks. We were very oversold. This looked like a good bottom. And if anyone bought that, you had a nice trade so far. Now, the leveraged play on TLT is UBT, Ultra TLT essentially. So I pointed out this long trigger off these doji, tight stop. So far it's been a nice little bounce trade off of that. And chart 49, here's high yield corporates. One thing that's also been positive for the market is high yield corporate has been stronger than the S&P here. And markets tend to follow this. So this is at the cusp of making it a new high. And just to compare the two, here's the daily chart of the S&P versus high yield corporate. So again, you can see the two tend to move together. All right. But you can see, when these divergences form, high yield corporate tends to lead most of the time, not always. Here you had a divergence and then a pullback there in August. Here you had a divergence in October. You had maybe a tiny pullback. And recently here, you've had stronger action in high yield corporate. All right, moving to the next part of the newsletter, let's look at the individual market sectors. We'll cover most of the important ones. Here's financials. Financials and banks reported earnings over the last week or two, and they've done well. Financials were in this demand zone. We had a RSI divergence there, and so far, nice rally. Guys, one thing over the last year we've been really focused on are these supply and demand zones instead of just horizontal resistance or support. And honestly, these have been awesome. You should really get in the habit of learning to identify these supply and demand zones. Eventually, I'm going to make a video on that, how to do that. Chart 52, here's the banks. So they've also rallied here as well. You can see the moving average ribbons curling up. Chart 53, here's XLK technology. Now this is bounced, but this has got work to do. You got a nice supply zone up here. You can see it's basically back testing the 50-day. So this definitely has some work to do. It could fail and form a lower high here. Again, we have a bunch of earnings coming up on large cap stocks, so that's gonna, that can trump the chart in any way as well. Chart 54, here's semiconductors. So semiconductors have had some wild action, popped out of this little diamond pattern, pulled back. Otherwise, it's basically in this big coiling action. Energy is building on it. Chart 55, transports. So they've rallied off this 200-day moving average area. So far, struggling here around the 50% fib. Notice your moving average ribbon is pinching now on the underside. This may need some consolidation. Chart 56, industrials. Here's a weekly chart. So big rally off this demand zone and uptrend channel, up almost 4.9% for the week. Chart 57, here's the daily industrials. So it got down near its 200-day moving average, which was not a bad area to take a shot at it. It's now rallied up here to a little bit of resistance area. Notice the moving average ribbon. So would like to see it push through there. Chart 58, materials. They've also rallied off this demand zone. There was a larger one down here, but we've rallied off of this one so far, off this nice divergence. Notice how wide the moving average ribbon got there. So anyway, declining 50-day moving average up here and 50-day or 200-day moving average. And chart 59, healthcare. This area still remains quite weak. It's rallied off the mid-December low, but it's running right into a downtrend resistance line. You have a declining 50-day moving average here. We don't have a bullish symmetry break either, so this is an important area. It's either going to head back down here, or if it can break this, that would be a positive, but it's right at resistance. Chart 60, here's biotech. So biotech had kind of a little bull trap move there in early November before reversing hard. Basically a curve of small caps, small caps sold off. It could be wedging here, but it still looks like it could need some work. It's still downtrending here, so I'd be careful this one until you get some sort of trigger. Chart 61, here's home builders. So they've rallied off that divergent low last week with rates pulling back, night around the 38% fib. It's got plenty of resistance up here. This could form a lower high ultimately, but so far nice initial bounce off of there. Chart 62, real estate, had a little bear flag which played out. Didn't fill that gap, or would have loved to fill that gap. Bounced here. Got a bigger resistance area coming up here. And chart 63, here's utilities. Got pretty close to the 200-day moving average. This is a pretty good area to take a shot at it. They've rallied up here. So far, only maybe 2 waves up. You got a little supply zone coming up. Now, one area that's been extremely strong, guys, is energy. Here's XLE. And look at these moves. So back there in November, I pointed out how it was at the top of the range. Well, that was, hope you took my heed, because it then absolutely got annihilated. And then now you've had a V move up. So very crazy action, no basing. It just got to the bottom of the range and then rallied straight up. Remember, we were quite bullish on energy stocks back in mid-December. And we said we think it would have a good year. Anyway, it's come a long way, guys. It's now near a supply zone. So this is not an area to chase. In fact, maybe it's an area to lock in some profits if you bought, baked down in here, obviously. I would look for a higher low in the next pullback, though. Chart 65, here's a very clean chart of the XLE, just without all the indicators. Again, you can see it was the top of the range, sold off, rallied right off the bottom of the range, now into a supply zone. Just a perfect chart. I would love a pullback, higher low here, especially in ABC, like a 1, 2, 3. That would be a great buying opportunity to load up more. Next, here's the weekly chart of XLE, up 6.3%. Remember, it rallied off that big demand zone and weekly uptrend line. What does this look like to you guys? Looks like a big weekly ascending triangle forming, doesn't it? Chart 67, here's the bullish percent energy index, BPNR. This also, remember, bottomed there in the oversold region. The last time it topped was the overbought region back in April, which is where the energy stocks topped out at. Anyway, pulling back here short term a little bit. Chart 68, here's oil services, weekly view. They've been lagging a little bit behind the energy, but nice rally here. Now, if this can clear the downtrend line here, that would be quite bullish. Here's the daily chart. Again, quite wild action. You can see the little double bottom bounce here. Took out one little parallel channel line. It's not near a supply zone. Get another resistance zone above here. Again, it's been more choppy than XLE Energy itself. Some of the individual energy names, here's Oxy. Remember, we put this out as a long idea back in mid-December. Great move out of the wedge. That's Warren Buffett's favorite stock. He bought a bunch more of it in December. Anyway, we did have a little symmetry break here, so I would be looking for the next pullback to be a higher low. Jabber 71, here's Chevron, been showing in this weekly range. It's been in this range for the last 3 years. Really nice move the last few weeks. Hope you guys bought some of that. Again, once it eventually breaks up out of this range, this could be a hell of a move to the upside. And Jabber 72 was Tidewater, kind of a depressed energy play into this weekly demand zone. Had essentially a 60% haircut from 111 down to 46.50. So to me, was low risk long there. You also had the weekly, the 200-week moving average down in this range. And Jabber 73, here's emerging markets. So they bounced off this lower trend line. Now with that pullback in the dollar, that's helped this. Again, it still needs to take out the downtrend line and some of these moving averages, but it's possible we have a decent low there. We'll just have to see. And let's go ahead and move on to the US dollar, guys. So here's the weekly view of the dollar. So down 0.8%. So far, pulling back off this weekly supply zone. Remember, it heck of a rally out of this big support zone in September of last year. This is the logical area to pull back from a bit. Jabber 75, here's the daily. Now the daily has pulled back quite a bit here today. This is a real-time chart. So it is looking toppy. Look at this very obvious MACD divergence. RSI is testing this 50% area, breaking to that. So a nice correction in the dollar here could help things. Here's the big picture view of the dollar. This is the monthly chart. It's kind of funny, guys. Non-traders out there, I hear some of my friends say, oh, the dollar's getting destroyed with all the money printing and all that. Well, I think that's eventually going to be the case. But honestly, you got to look at charts. I mean, the dollar has been technically uptrending since 2008, long term. Okay. The last peak in the dollar was in this 2001, 2002 area where you had the head and shoulders top. Moving on to crypto, here's Bitcoin. You can see, remember, it held this demand zone. We were wondering at the time if this is a head and shoulder top, but it held support. It took out the downtrend line, so that negated that pattern. Anyway, overnight, it did make new all-time highs at over 109,000 before pulling back. Jabber 78, here's the other daily view. Shows you how we rallied off that supply zone and didn't make a new all-time high. Now, the wave count, I think we're in some sort of wave 5. So once this ends, then we could see that deeper wave 4 correction. Moving on to commodities, Jabber 79. Here's DBC, the weekly view, up 1.4%. Trying to break out of this weekly range. Still, you need to see more confirmation here. You can see how tightly wound the moving average ribbon is. By the way, I updated the holdings. So actually, DBC owns quite a bit of treasury bills and short-term treasuries. So 28.5% treasury bills. Otherwise, energy is a fairly big component. You could see crude oil, Brent crude oil, up around, 28% or so. Then you got heating oil, then gasoline futures. So, almost 50% of this is energy. And then you have all these other ones: gold 7.75%, natural gas 7.3%, corn, silver's 1.89%. You can see all the other commodities here, but very concentrated in energy. Jabber 80, here's the monthly view. You can see, again, it's been in this coiled range. Now, to me, this is the more important pattern, this coil. Very tight moving average ribbon. You've had volume declining this whole consolidation, which is what you want to see bullishly. And notice your MACD recycle back to zero. It's trying to curl up. So this breaks out eventually. Commodities could have a great 2025. And that may outperform the general market. Here's the daily view of the DBC. Again, really nice move out of this coil recently, but you can see it's up against this resistance area up here, these previous highs. Very wide moving average ribbon. So to me, this needs to maybe work off a little bit of this overbought. Now, some charts, guys, I've been following is the DBC SPY ratio. That's commodities to SPY that's been underperforming. So last year, I showed this very obvious 5-wave wedge. Look at this, just absolute textbook. Well, this wedge broke out as the commodities outperformed and the general market pulled back. It stalled at its symmetry target. Okay. and pulling back here as the S&P has been a bit stronger here in the short term. That said, even though we didn't have a symmetry break here, I'm looking for a possible higher low on this ratio and then another big rally up. Chart 83, here's the daily or the weekly CRB SPY ratio. So remember, back in December, I was showing this very obvious falling wedge. Well, that wedge broke out nicely. Moving on, chart 84, here's crude oil on the weekly chart. This big weekly wedge. So a little Pinocchio move above that wedge trend line before pulling back some. Chart 85, here's the daily chart of crude oil. So remember we were showing this coil inside the bigger channel. Well, we broke that coil a few weeks back, broke the channel, rallied up. Now we pull back from the supply zone. There's a big demand zone down here. So if crude oil pulls down into here, that's an area to watch for another buy opportunity. Chart 86, natural gas. Now, this is absolute textbook, guys. Remember I was pointing out all these multiple tests and failures of the 200-day moving average for the last year and a half. Well, once price finally broke and held that 200-day moving average in late December, that was bullish, and that represented a macro trend change. That's why I changed this to green. And you can see, huge rally up. Next, chart 87, here's copper. Again, held that demand zone a couple weeks back. It's pulling back here a little bit. Chart 88, here's DBA agriculture. It's had a nice rally after that ABC pullback in October. Right now, it's coiling. Chart 89, here's corn, weekly view, up 2% for the week. Really nice rally off that big demand zone. Corn has been downtrending since 2022, but came into this big support zone, curling up. You can see your moving average ribbon is starting to go bullishly stacked. So we could see a major trend change here. Chart 90, here's the daily view of corn. You had a nice, basically, cup and handle look, horizontal resistance, which broke out over a week ago. Still looks very strong here. Uranium had a good week, up 3%. I'm not showing that chart tonight, so let's go ahead and move on to precious metals. So here's gold. Gold for the week, up 1.25%. Again, this is a weekly chart. Just look at this awesome rally after it finally broke through this big resistance area. That went back, spanned back to 2020. Heck of a move, been in this nice uptrend channel. It's possible we completed that wave 4 correction. Eventually, I'm looking for new all-time highs, and gold is a wave 5. Chart 92, here's the monthly view of gold. So far up 4% for the month. Again, not completely sure this wave 4 is done, but eventually looking for new all-time highs and a 5. Chart 93, here's the daily view of gold. Been showing this coiling action. You can see this price stalled right at that last peak. I love to see it break that, but it's still possible. We're working in this coil. All right, the bulls really need to take out that last high. Chart 94, here's a cleaner version of that coil. You can see stalled at that last peak. So again, if we do come back down, though, you want to see it form a higher low if it's a wave 4, or it could be, again, this could still go either way. We could have the lows in place, guys, or this could be a more complex correction, but, just something to be aware of. Chart 95, here's the ETF GLD. You broke that coil. Now back testing the coil trend line here. Moving to silver, here's silver on the daily. Again, rallied up off this demand zone once again, but you can see it stalled at the downtrend line. Really needs to clear this downtrend line, guys. Here at a little channel. Now, if it breaks down again, obviously you have your support here. If the precious metals have a deeper pullback, though, there's a huge, very strong support zone down in this range. You can see it was previous big support, resistance. I don't know if it gets down to there, but if it were to sell off, I'd be a big buyer down there. Otherwise, the bulls need to clear this downtrend line. Chart 97, here's the monthly view of silver. Like I said, so far it's stalled at the supply zone, which I had identified ahead of time. March of last year, we broke out of this weekly coil. Long term, over the bigger picture, I am expecting silver to test these much higher levels, but it's going to take time. Here's the bigger picture chart going back to the 1970s. Kind of looks like a big ascending triangle if you look at it. You had the Hunt brothers blow off back there in 1980 where they tried to corner the silver market. Then you had the 2011 peak at 50 bucks. Eventually, I think silver is going to retest that $50 area. Now, another area, guys, I'm really interested in is platinum. Okay, I think it's a bit early, but platinum, first off, it's coiling here on the monthly, so energy is building here. And Chartber 100, here's the platinum gold ratio. So the ratio is 0.35. So this is the lowest it's ever been. Okay, this ratio goes back to 1980. Platinum was always more expensive than gold, as you know. Well, in the early 80s, it looks like it was a little bit, but this is basically tells me that platinum is severely underpriced relative to gold. So it's an area I want to watch, for a good bottom entry. All right, moving to the mining stocks, GDX, here's the weekly chart up 2.2%, back testing this broken trend line, so be aware of that. Chartber 102, here's the daily chart. The bullish view, we completed an ABC. This should be C, not B, guys, but again, we'll see. Moving average ribbon is pinching there on the underside. Chartber 100, here's another daily chart showing these channels. Here's the proper ABC off this demand zone for now. Best to see it clear this trend line channel. Now, I looked at the individual precious metal stocks. Here's the ones that stand out to me. AEM, you can see it's coiling nicely. It's been quite strong. Here's the weekly view, nice coil. Chartber 106, KGC, another nice strong stock. It's in a channel here, but nice strong chart. Largest component of GDX is Newmont, which got hit in October off that earnings. That said, it did form a recent divergent low, so it could be a low risk bottoming area. And here's a silver stock, EXK. It's been downtrending, but if it could break this ratio in this channel, it may be a decent buy. And it's following up with the final charts, guys, some trade ideas. So here's MXL, was a long idea from last week. It's been playing out. Chartber 110, TVXN. So it's around the support area. Looks like a low risk buy just for a trade. Here's the 2-hour view. It's wedging here. You can see your MACD divergence or your moving average pinch. Chartber 112, Interactive Brokers, ascending triangle look to it. Chartber 113, AVGO Broadcom. Remember I said this had a coil. This doesn't report earnings anytime soon, but a coil. And Chartber 114, PBF, it's an energy play. Very tight little bull flag look to it. Chartber 115, UAL, it's an airline, little tight coil. It's had a heck of a move, these airlines have, but a little coil here short term, maybe get another pop. Chartber 116, Intel, kind of a triple bottom or a quadruple bottom. Could be lower risk. I like the volume. Intel has been absolutely destroyed over the last couple of years. Maybe lower risk finally. So here's the monthly chart. Going back, you can see it's trying to bounce off this demand zone from 2012 and 13. Not saying it's done yet, but it's had a hell of a haircut. We all know the problems of Intel. Maybe lower risk for you bottom feeders. And the final charts, guys, are AZ Smart Cart. So back in October, we held a webinar with the company. Steve and I have had a long-term investment in this. A few subscribers do as well. Had a cup and handle here, but the stock, rallied from, 250 all the way to 750 since we had that webinar. So any Breakpoint Trades members who followed that did very well. That said, it is consolidating nicely here. I was worried about maybe it breaking down here into this demand zone, but it's coiled here. This could break up, maybe a fourth wave of some sort. We'll see if it could break out of here and make a new high. Here's the weekly view. You can see it came out of that base. It's got a nice resistance here. It's trying to flag. Look at the volume patterns. The next good resistance would be about 10 bucks. I'm hoping to see some big earnings or some news here on this with maybe announcing some recent big retailers. That would be something that can juice this up. All right, guys, so we'll see what happens. Quick check on futures. ES futures are up 21. Gold is down 25, by the way. So anyway, have a wonderful rest of your Sunday. Happy MLK Day. Enjoy your day off for the U.S. markets, and we'll be back at it tomorrow. Take care, everyone.